Hello, Mish. Welcome back.
Hey Jeff,
Um,
how you?
Hope you had a great weekend. I know you guys were at the Money Show and you did a whole presentation at the Money Show. How'd that go?
Well, it was great. It was a 2-hour master class on everything A to Z for the serious self-directed investor, right? So I thought it was kind of ironic because I wrapped up the entire weekend of the Money Show after listening to many, many people with many, many opinions. Mine was all about don't listen to anybody or trade on anybody's opinions. Learn how to use essentially four of our own indicators to make your own decisions. So that was great because I covered phases, I covered sector rotation with the family, I covered calendar ranges, especially with January coming up, and real motion. That's really basically what I covered, then with a bonus of looking at big view. And so I thought it was pretty awesome, actually. People walked away with like, wow, this sounds so simple. I like it.
Okay, I don't know if we should probably cut that out because you just sold everybody on this whole thing that they just missed. Um, you're describing this, and I'm thinking, oh, wait a minute. Like, people can't get this. Well, that was a great presentation. But actually, now that I think about it, maybe what we could do is, well, there is no recording, but if they call Rob, I don't know. Well, we're going to talk about similar stuff right here. But if they call Rob and they kind of want to know what you did and want something like it, then maybe we'll work something out. But we don't have a recording. But yeah, I know the presentation was good because I helped you put it together. So if you got all
Exactly.
that done in your allotted time, um, I'm sure people loved it.
Yeah, it was pretty cool. And
So
just
here's
go ahead.
let
I'm sorry. Go ahead.
that's okay. I'm sorry. Let's dive into. I have a really specific question for today, and it has to do with the fact that um, there's a lot of stuff that's taking off, has been taking off, and everybody's super excited about all kinds of um, trends, myself included. But some of them are exhibiting some patterns that people should take heed of. And I've got one of those patterns on the screen right here. This happens to be NVIDIA. Um, for those of you who are paying attention closely, this is not NVIDIA today. This is actually NVIDIA back in June, where everybody was really in love with NVIDIA, and it had this uh, big red engulfing. I don't think we need to be really specific about the pattern, but there's a couple of charts that I want to get your opinion on from the perspective of how do you prevent from getting sucked in to the trend right at the last and hopefully after this presentation, the most obviously wrong time, right? So fast forwarding here with NVIDIA, after that big red candle bar, NVIDIA went through a period where it didn't take out that high for quite some time, came all the way down to the 50-day moving average, and then even lower. So the point here with this presentation or this video is what are we looking for so that even if we like NVIDIA, we know it's time to hit the pause and look for a better opportunity. Before I keep going, is there anything that you would say or describe about this whole NVIDIA situation that we can apply to some stocks right now?
Well, yeah, we're going to talk about that big red bar when you make a new, we call it a 60 plus day high. In that case, it was a new yearly high. What you skipped over was, I noticed as you were going through, there was also a mean reversion oversold condition on real motion. That's why we have those things there. Um, and the other thing I would point out is that when you're talking about the darling of the stock world, like NVIDIA, and you constantly, like we do, hear analysts go on and just say, put it away, never sell, never sell. We are really gearing our talk to, I wouldn't call it even an active investor. I would talk about it more as an investor who wants to have much better timing. So they're not sitting through some 10, 20, 30, 40% drop and then trying to figure out whether or not they should get out or buy more on the way down, which we know has been working in the bull market for the last couple of years, but doesn't necessarily always work if things do not necessarily continue with the bull market. And I'm not saying it won't. I'm just saying what we really want to do is we want people to have better control of their timing with these sort of simple chart patterns.
Right. So if we take, so NVIDIA, we got the reversal pattern. Can you see my mouse okay? I can never really tell.
I can see it, yes.
Okay, so we've got the reversal pattern that continues lower. It rallies back up. We get a similar reversal pattern, and then the sell-off. Rather than spend too much time on this one in particular, let's go to family favorite right now, that people could easily be very enthusiastic about, Palantir.
Yeah, I mean, and this is classic. Talk about the
Whoops.
conversation. There has been so much conversation about this stock is the future. This stock is going to several hundred. And clearly it has gone through these massive periods of consolidation. Then it makes a big move. You had that gap there in the beginning of November, and it really basically consolidated from there with no real kind of scary looking pattern until pretty much today. But we don't know that yet for sure. But there's a couple of things we do know. I mean, those of you who understand candlesticks, that's sort of the classic bearish engulfing pattern, which simply means that the candle of the red bar is engulfing the candle of the bar before it, which was a green bar. So it essentially, in the candlestick world, means a top, or at least a top for now. So I think the first takeaway is if you are after Friday thinking, gee, the stock came in higher. I mean, there was all this talk this morning about it. Oh, it's taken out 80, it's going to 100. If you just kind of use, and I haven't looked at this on a 30-minute opening range basis or anything like that, but if you just realize the stock has been going up and up and up, and even the chart on the bottom, the real motion chart, we're starting to show signs that the momentum is at the bottom. No, I'm sorry, that's the top one. Yeah.
Yeah, they're both real motion. This one's the 50 and the 200. This one is the 10 and the 50. I look at the 10 and the 50 a lot.
Yeah, let's look at that's the one I was looking at. So the 10 and the 50 was already showing a little bit of signs of some exhaustion because, right, you're just pointing out the peak there at a lower price. The momentum was higher than where it was on Friday. So, these are little hints, but the bottom line is this. If you get up and you go, today's the day I'm going to buy Palantir, by golly, I missed everything from, by the way, I was long at $7. I mean, my God, I felt like so smart when I sold it at 20. And right, I mean, and here we are now. Not that we've been in it with the model, by the way. So that's why I love the models, because the models pick up where my sort of fear of momentum trading leaves off, right? So for me, I'm always half expecting a day like today to happen at any moment when everybody's crowding into a trade. So in this case, really the basic question is this a top? When I say top, I don't mean forever, but is this a top to avoid you from getting in, and what you should look for to confirm it? And I think that really, to me, would be the most meaningful part of this conversation. So essentially our definition is when something makes a new high, whether it's a yearly high or 60+ day high, and the volume is good. I don't see the volume there, but I would assume the volume must have been pretty high today.
Yeah, I don't have the volume on here. I probably should, but
Like everything, you need confirmation, right, Jeff? So right now, all we have is a nasty looking bar.
yeah, I'm going to stop you right there. We didn't
Yes.
we didn't really rehearse this. But now that I'm listening to you, I realize there are some really simple rules without even getting into the candle patterns that we tend to follow. And you're going down the road. One, is it a really significant high, like for the major trend? Two, is that high over the prior day's high? And this subject to interpretation, but for me is a big plus. is your open above the prior day's high? And the definition of the bullish engulfing pattern is that the open just has to be above the prior candle body. But personally, I don't really care much about an engulfing pattern unless the open is over the prior day's high and the close is under the prior day's low. Now, this is
Mark,
borderline there,
yeah,
but
market.
a candle person would say it's engulfing. So that
Right.
leads me to my kind of last criteria, which is where's it close relative to the prior day's low. And so all sum that all up. Is the open over the prior day's high? Is the close under the prior day's low? And is the high a significant high, right? And then volume, which I don't have volume on this chart. But if you use those kind of reference points, you can find yourself being able to look at stuff like this one. This is pretty negative. Looks pretty bad, but it didn't open at a new high. It didn't close under the prior day's low. And then you get to the confirmation, which is where you were going when I put you on pause there. So keep going with the what do you look for next?
So what you would look for next is the confirmation to me would be that tomorrow would close under the low of today. So intraday, it could get into the bar. That's a big, massive bar there. So I wouldn't be surprised even if we have an inside day. So there's actually two levels of confirmation that we have to talk about. When you have a massive red or green bar like that, it would certainly not be surprising that tomorrow would just be an inside day. So what does I mean by an inside day? It means that tomorrow's range could be trading inside today's range because it was quite large, right? So that's one thing. Or it could gap open lower tomorrow and then never close above today's low, which would sort of be the confirmation. So let's go with that one first. If that's the case, then A, don't buy it tomorrow. B, that we're probably heading towards some kind of a bigger correction somewhere between 5 and 10%. So 10% we've already accomplished in one day. So what happens when that goes on? Then we really have to start looking at more serious support levels to see if they can be tested. Well, note, for example, your cyan line there is the 10-day moving average. So the one thing we would look for is maybe it opens lower tomorrow, but it holds the 10 and winds up closing above, maybe even close above today's low. Then I would say this was just some one-day massive liquidation, doesn't mean anything. Two would be it breaks down under the 10-day moving average, and now it looks to me like what's your real next level of support? You'd have to go back really and start looking at 60, where there was a bunch of consolidation lows.
Yeah.
Right.
Nice round number two.
Right. So, but I still wouldn't say, okay, now, oh my goodness, we have almost a 20% correction. It's time to buy it necessarily. I would have to see some level of proof of that. And what kind of proof would I look for? I mean, it's just kind of complicated, but one of the things I do is if we have 2 or 3 days of negative floor trader pivots and we hit a big buy zone, I will look for some kind of reversal on an intraday basis where it gets over R1, for example, or it has a 30-minute opening range breakout above R1, or that kind of thing. So that's really getting into the weeds. We don't need to get into that. But essentially what I'm saying is it definitely behooves you to try to be patient, especially with a big stock like this. The second thing most likely is going to be an inside day tomorrow. It's just kind of my guess. So if that's the case, then the next day, Wednesday, you would want to see either A, the highs be taken out, and then you shouldn't be afraid of buying it. This is a big stock with a lot of bullish people in it. And if it doesn't get through today's high after an inside day, does it break down under the low? And then, of course, now you're back to that scenario of now waiting for some kind of reason to get back in. Could it go down to the 50? Absolutely. Hasn't been down to the 50 in quite some time, since September, actually. So, this is really kind of an interesting situation. And that's why you get so many people who have absolutely zero understanding of technical analysis saying, oh, just buy it, just buy and hold, because eventually it'll come back. We don't like that.
Yeah, it actually sets up pretty well here. We started with the NVIDIA example. If what you described, which is it closes below the low of the reversal, potential reversal bar, then you're in down mode, right? Just basically have a bearish approach until it makes more sense. If we get an inside day, what I was going to point out is inside day. The other thing that I look at on any big range, especially, look for the floor trader pivot in that day. And the other thing with engulfing patterns is look at the high of the day before. So if you got an inside day here, this is what you're describing, some kind of inside day. Now it doesn't necessarily have to be below this. Then that high becomes your a potential key point. If you still want to be bullish, you just wait for it to get back over there. And the whole point of all this is so you don't end up with that NVIDIA situation where you buy it in here and the trend goes down that way. Well, we have an example of that right over here. Like this wasn't a terrible engulfing pattern, but it was a bearish day. Here's the low. It never took out that low. It had an inside day. There's the whole pattern you were just describing. And then once it took that out, it was back on the horse and then going. Now, they don't all line up and look that nice and neat and work that easily, but conceptually, that's what we're talking about. Let the market tell you what to do next, but just don't buy the thing with this big cloud over it and ignorantly and then hold it as it goes down to who knows where.
And don't believe analysts, my God. I mean, obviously, Palantir is a great company and AI, it's all AI, AI, AI. But right now, if we're seeing any kind of mini bubble in AI, which is very possible considering how crowded it got, the other thing is just wait. I mean, just wait altogether and go find other things that are actually setting up better. And that's something that Jeff and I talked about before we came on.
Yeah, we have a good example there. But before we do that, I'm going to go to another one that's a little inflated, so, um, which people may be paying attention to, maybe not. Ablovian. All right, so um,
Lovian.
in case you can't really see these numbers, this thing broke out from about 80 something here. And now it's trading, or it's just trading 400. Now, this one doesn't fit the same reversal pattern exactly.
No, it's
Actually,
worse.
not even close. We didn't open higher, right, than yesterday. But we did gap down, stay down, close lower. So before I say anything, what do you make of this one?
Well, I just started hearing about this stock, and I know part of the disappointment was that it didn't get into the S&P 500, so that's part of it. AI generated. I can't really tell you I'm an expert in this company. Like I said, I just happened to hear about it recently. But you can see also that in terms of the real motion on the shorter term real motion momentum indicator, it already had on that new high a mean reversion, sell mean reversion. So that's number one. Now, if you're saying, oh, well, this was an overreaction today, it's sitting right on that moving average. What is that, Jeff? Is that
The
your
10.
their 10? And then if you go to the longer term momentum indicator, you can see that it also had a mean reversion today. So it would have to show me the momentum is back as opposed to we're now ready for some kind of a further erosion of price. Now, if we look at the 10% rule, this clearly was the high from Friday, and now this low today is definitely what we would call what would you call it? A glass ceiling high or a brick wall high?
Yeah.
Yeah. So in this case, now if we're looking at the kind of the 10% rule, I can't really see very well. Is that 400? So you're looking
Yeah.
for a $40 level correction. So again, just like you were just talking about, you would want to look at around 360, which actually has some nice support going back. First it was resistance and then it became support at that 360 level further down.
Well, yeah, that's 300.
Oh, that's 300. Okay, I don't have my glasses on. Never mind. So that would be way more than a 10%
Yeah,
correction.
we're through 10%. We're trading at 340. So
Okay, so when you have that kind of level of correction in one day, basically that tells me that you don't want to jump into that stock until you really start to see some dust settling. So, we have all these different ways. You just mentioned one with the floor trader pivots. I just mentioned another, looking at classic levels of support that were resistance like 300. Another, of course, would be possibly looking at volume patterns. I find with Bitcoin and all of the cryptos, essentially what works the best is if you start to see big red bars on accumulation, or I should say distribution days of volume, I wait for the first day when we get an accumulation day of volume. And then I know that the selling has dried up and the buying's coming back in. There are all these tricks. But the big point is that you want to avoid this. And if you happen to have been long coming into this week in anticipation, and I think that's probably what happened to a lot of people, what you saw was a major shakeout. But that doesn't necessarily mean the shakeout will continue. So the other thing you can do now is look at that 10-day moving average, just like we were talking about with Palantir. It closed below the 10-day moving average. If we get a couple of days of sort of digestion and we get back over the 10, maybe you could say today's low is a good sort of interim point to risk off of if it starts to move back up again.
right, which is essentially saying the same thing we were saying with the other pattern, which is you're
Right.
using this bearish day, the low of that, as your confirmation that it's going to continue to go lower. So yeah, if I had gotten caught in this, I'd be looking at my stop being under this low to see if this is just a, you know, everybody puked day, or um, everybody puked and now they're still giving up on this thing. And I don't want to be caught in a cascade down, but I've got a good level right there. And if I'm not in it, no reason to be jumping in it until the dust settles. And there's plenty of places, like you pointed out, 300, good level of support. The bottom of this gap is going to line up pretty nicely with the 50-day moving average. There's a good level of support. If it seems like that's kind of far away, keep in mind it only took about 20 days to get here, so it could take about 3 days to get there. And
Stairs up, elevator down. There you
that's right.
go. So,
So,
really basically, Jeff, what we're talking about is how to avoid FOMO, number one. And number two is how to avoid buying a falling knife. And those are two really important rules for traders to have in their minds. It's something that I am very good at avoiding, FOMO and falling knives. And that's why I think it's so important that we're pointing this out today.
and the fact that you're saying that made me think of something that I didn't think of coming into this. The other thing that we're saying, I hope this is now loud and clear. Just because it's pulled back doesn't mean it's time to buy it, right? Look at the pattern, right? Some pullbacks are okay, others not so much.
Exactly.
And there's almost always something else to do. So with that in mind, let's take a look at your response to that when I asked you that question. When I said, "Well, what do you think you would tell somebody if they wanted to buy something and it wasn't one of these?" And you pointed out Stratasys here
And Rivian, but let's talk about
and
strategy.
Rivian. Yeah, but this
That
one
is
really
so
got my
beautiful.
attention.
Yeah. All right. So first of all, I have been ridiculed for the 3D printing space because it's been out of favor for so long. But to me, this is kind of the classic example of that's because everybody raced into everything else in terms of the Mag 7 and the tech and forgot about 3D printing. But I never forgot about 3D printing. Why? Because it really does sort of support the whole idea of industrial improvements, basically. Obviously with aviation, 3D printing is really great because things weigh a lot less. In building, especially if raw material costs get greater, you can 3D build a house. Obviously, in the biotech space, 3D printing is huge. They're printing, all kinds of things, skin and ears and organs. And, to me, I really was baffled from the story of why it became so horrible. And I know part of it was because also these companies have done so much research. They haven't really focused much on the bottom line of profit. So now all of a sudden I see that this one starts to look basy back in September, but I still didn't touch it. And you see your calendar ranges there. It came back through the calendar range low, then it gapped through the calendar range high, and I still didn't touch it because now I'm the opposite of FOMO. I'm like scared of getting into something that was just going to continue to go lower until today. Okay. So that's why we wanted to talk about this, because now I can see that after it had that high and then it broke down under the calendar range, it held the 10-day moving average. It's holding now above the 200, which is that green line that's coming right underneath the calendar range. Right, momentum is great. And we had the highest close that we've had since, oh my God, I think we have to go back to what?
Actually, yeah, you're right. Because this, I don't know if this
Whoa.
black is a close, but it goes
No,
back. I mean, this is the beginning. Oh, I guess that's the July range. But
right. March, April, I guess we can really say.
yeah,
Yeah, so this is pretty. This is pretty, and it offers a really clean risk, unlike the ones that we were just showing, the Palantirs and the apps. I mean, where's your risk? To me, if I can't discern a really good risk based on our rules of somewhere between 2 and 3 ATRs, pass. This has a beautiful risk. Just go under all this recent consolidation, a breakdown of the 200-day moving average if you really want to give it a little more room under the 50 and the 6-month calendar range low. So now it poked its head out. It had a good close. The momentum is great. To me, a mega trend that I've loved for years that fell out of favor looks like it's going to come back into favor. And you never know what the story is going to come back about strides that Stratasys is making, or maybe some kind of a buyout or what have you. There was talk about a buyout with this a couple of years ago. And can this thing get back up to
no.
2030? Absolutely, it can.
Yeah, look at and it's 10. Like I'm a big fan of round numbers.
Yes.
It's getting back up through 10.
And 10 was, by the way, I won that award for the best trade of the year in 2018 in Real Vision. It was
Yeah,
for 3D printing. And I said when it cleared 10, it was the buy. And from 10, it went to 50. Okay. So there you go.
I'll take 20.
Yeah.
Yeah, this is totally the opposite of what's going on right now. And a great base. Everything about this base looks good.
Yeah.
I don't
Yeah.
know when earnings
It's
uh,
passed.
it is. All right. Awesome. All right. And then lastly, we will take a look at Rivian.
Oh, yeah. My other pretty one. I feel very redeemed today, Jeff, because everything that I've been talking about, China, Rivian, 3D printing, retail even closed green, even though it sold off a little bit at the end. Novo Nordisk was green. Vietnam was green. I mean, like all the things that when I go on the shows and they go, why isn't this woman talking about Mag 7 like everybody else? I'm not interested in this. Today, I felt like, yeah.
Yeah, that's true. In fairness to everybody else, I wouldn't let you talk about China because I felt like if you weren't in it, you missed it today. They're just going to
No,
make
yeah, he
people
didn't want, yes, Jeff would not let me talk about it.
make people feel bad because you wanted to talk about Baba and whoops, sorry. You wanted to talk about Baba and I said that's not fair because yes, you've been talking about it down here, but that's just going to make people mad that they weren't in it. So
But they
if
haven't
you
missed
if you
it.
missed it, don't blame me. I was just trying not to throw salt in the wound.
And you didn't miss anything yet. It's just getting going, but that's another story for another podcast. Okay, so look at Rivian. So Rivian was at one point was up 15% today. I mean, that's Palantir kind of move, right? And
Well,
yet this is Rivian and people, oh, AVs, oh no, they're done. Oh, this company sucks. Oh, oh, oh. I mean, this is when I get really happy because I tell people don't listen to, these sort of opinions. I mean, I can't tell you how many people from a publishing company that we are very well familiar with talk about the EV hoax. And I'm like, come on, don't trade with your politics, right? This is a classic example. This is a good company. Their earnings came out recently. It wasn't that bad. I mean, it wasn't great. They still had a loss, but they had a good projection. They made deals with Volkswagen. They got government money. Okay, that could still go away under Trump, but it may not. I mean, we don't know this. So right now, what did it do? It was beautiful. It consolidated, never broke down really under 10. And then it took out the 50-day moving average, had the classic confirmation of a recovery phase, gave you plenty of time to get in there. And then it went right to the 6-month calendar range low. And today it opened up and it took it out. And look where it stopped, though. I mean, it does have a
yeah.
lot of resistance at 15. In fact, Jeff, I think you and I talked about 15. So
Yeah.
again, is this a stock you missed because you didn't get in today or when I was in or anything like that? No, because if you on a weekly chart, there's this fabulous trend line that comes down that literally breaks out over 15. It's a weekly chart, so you want to see a weekly close over 15. But nonetheless, if this thing is going to get going, it's going to get going now, and you'll have plenty of time to look at it.
Yeah, before we go to the weekly chart, since I already started drawing the lines, 15, right, is that this is a big level from here, then in here. But this July calendar range here was important, and then here. And so there's a good chance you could have some nice consolidation in here, pull back to a 10, and then break through that 15, have a great stop, and you could be off to the races.
Yes.
And one of the reasons, which you did point out, to expect all that to happen is that we've broken through this 200 here, with the 50 under the 200, but real motion has been bullish with a bullish divergence through this whole thing. I mean, that is a really powerful real motion divergence, and they take a while to really mature. And the the trigger is the break over the 200. So this is just getting started if this is good.
Yep. Even my dog agrees.
And and if we go to the weekly,
Yeah, if you stretch that out a little bit
um,
and you take, there's
hold on, sorry.
no, it's okay. If you
Yeah,
go to that high from July, I think you may even be able to go further than that. Because if you make a new high and then you make a new low and then you make a new high and then you make a new low, becomes a valid trend line. So, but if you just pull it from
sorry.
there, or even if you go back to that high that we had
From
in
here.
October 2023, yeah, look at that. So, I would say that you already started to have the
Yeah, you
breakdown,
got
but
that
Keith
one.
would take the line from there. Yeah, Keith
Yeah.
likes the trend line from there better. And so, you're
Yeah, I
there.
would agree with that because you've got 3 points. It
Right,
really does a
exactly.
better job at just,
Yeah.
but I don't know if he did this.
No, he didn't do that. He
No,
connected, he drew that second line that you just drew that corresponds beautifully with today's
yeah, this
high.
one.
Yeah. So there's your weekly close. And and I think sometime we could do a podcast on the art of adding to a position, not today, but this would certainly be a place that I will add to the position.
Yeah, that weekly really does look compelling. Yeah. And it for me anyway, never hurts to know that Amazon is involved in this.
That's right. I forgot about that story too, till you reminded me of
Oh
it.
my gosh, Amazon, like they bought all their trucks. And
Right. Yeah, they
I
bought like 6,000 trucks or something.
yeah, when everybody was saying this thing was going out of business, my feeling was, well, Amazon will just buy it. So Maybe you'll get a couple shares of Amazon.
Yeah.
But it doesn't look that way now. Now it looks pretty good.
Yeah. And, very often the technicals precede the fundamentals. And actually, going back to the money show for a second, one of the guys I was on a panel with has been just a fundamentalist forever. I mean, he's very well known in the business. And he actually admitted during the panel discussion that he's starting to look at charts. And I thought that was great. So, talk about the old dog, new tricks thing.
All right. Well, do you have anything else? I think we covered a lot.
I think we covered a lot too. I hope people can digest all of this. I think here's the takeaway is if something has already had a trend for a long time and it's all anybody talks about, and you start to see a place where you don't know where your risk is, and then it turns around and you think, oh my God, now's my opportunity, think twice based on what we showed you. And the other is there's always something to trade. One man's trash is another man's treasure. That's in my book. So here's two examples we gave you. Stratasys and Rivian, trash, 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 have become my treasures. So there you go.
Yeah, and it's not part of this video, but I would argue there's plenty of stuff that is in the momentum space breaking out to new highs that is still looks good. So don't, as Mish said, don't buy the wrong stuff.
Yeah. And you can always ask.
That's true.
You
It's
can always
true.
ask. I'm on X all day long. And a lot of people do ask me actually. So keep asking. I'm always happy to answer those questions.
Awesome. All right. I'd say that's a wrap. Thanks, Mish.
Thank you, Jeff, and thank you all.